Hello everyone and welcome back to another video. In today's video, we are going to be taking a deep look into Ray Dalios' portfolio for 2022, as well as his most recent stock market moves. Now, Ray Dalio is one of my all-time favorite legendary investors because he is honestly one of the best macroeconomic investors in the entire world, at least in my own opinion. And he's kind of been preaching that inflation is going to be rather high for quite some time. Like before inflation was even a worry in the overall market and before the average investor was talking about inflation, he was already hedging his portfolio against inflation. Now, another reason why I find Ray Dalio so interesting is because he has been hedging his portfolio to be quite conservative and a lot more defensive. So he hasn't been really chasing massive gains in the stock market, but he's just been trying to preserve and protect his wealth. And this is another reason why I think that it is so interesting to pay attention to what he is doing and really just take a look at what his moves are in the stock market. So that is exactly what we're going to be doing in today's video. And with that being said, let's hop into the computer and I'll show you guys all what Ray has been doing and what his portfolio looks like in 2022. All right, so this right here is Ray Dalios' most recent portfolio. And right away at the top here, we can see that his number one holding is actually the SPY ETF, which is essentially the S&P 500. Now, what's interesting about this is that Ray actually trimmed his SPY holding in the fourth quarter of 2021 heading into this year. And if we take a look at his ownership history right here, we can see that he actually held about 3.7 million shares in the fourth quarter of 2020, and he's been consistently trimming down his SPY position to about 1.8 million shares now. So he's essentially cut his overall SPY position in about half over the past year. And this to me is actually pretty interesting for multiple reasons. But the first reason is because the S&P 500 is continuing to get more and more concentrated into just a handful of stocks. And take a look at this right here for yourself. So right here, we're taking a look at the components of the S&P 500. And we can see that Apple now makes up about 7%, Microsoft makes up 6%, Amazon makes up 3.6%, and then Google makes up about 4.17%, and then we have Tesla at about 1.93%. But basically, these top 5 and 6 holdings right here make up about 23 and 25% of the overall S&P 500. And that's what I mean. The overall S&P 500 comprises 500 different stocks, but basically 25% of the overall index now is just 5 companies, and it's getting more and more concentrated into that small handful of stocks. And actually, if we take a look at just Apple and Microsoft, these two stocks alone make up about 13% of the S&P 500. And why this is so interesting to me is because if we go and take a look at Apple and Microsoft's price to free cash flow over really the past decade, we can see that these two companies are continuing to get more and more expensive. And currently, Microsoft's price to free cash flow is sitting at 36.4 and Apple's is sitting at 26.5. And you guys can all see for yourself right here on this chart that these are quite high price ratios for these two companies. Right here on Stock Unlock's quick stats, we can actually see that Apple's average price to free cash flow ratio over the past decade has been about 15.8, and Microsoft's has been about 22.5. So currently, compared to how these stocks have traded throughout history, they are selling for quite high price ratios. So in my opinion, it could be that, Ray Dalio is trying to diversify a bit more, and the S&P 500 overall, he thinks may just be getting too concentrated in these stocks that are looking quite expensive, at least in my own opinion. So let's head back over to Ray Dalios' portfolio. And the next thing that I found quite surprising is that he sold quite a large portion of his VWO ETF, which is an emerging market ETF. He sold about 28.3% of this position. Now, if we go down to IEMG, which is another emerging market ETF, he trimmed this position by about 40%. And then EEM, which is another emerging market ETF, he trimmed this position by about 56%. So what it looks like Ray Dalio is doing is trimming all of his emerging market ETFs. This is consistent across every single one of these ETFs. And this actually was pretty surprising to me because the VWO in specific was one of Ray Dalio's largest positions. I believe it was his second largest position in the third quarter of 2021. And this is a pretty significant sell on his part. Now, for those of you who may not know, these emerging market ETFs are basically spread out all over Asia, but the top holdings are like Alibaba, Taiwan Semiconductors, Tencent, Infosys, and again, just a bunch of different companies that are spread throughout the Asia region. So in my opinion, it kind of looks like Ray Dalio is trying to sell out of his overall diversified Asia positions. And what's really interesting about this, though, is that he has been massively increasing his Alibaba position, and he's increased it by about 30% in the fourth quarter of 2021. And if we take a look at his ownership in Alibaba over time, we can see that in the second quarter of 2021, he held about 1.4 million shares, and now he owns 4.27 million shares. So he's basically tripled his Alibaba position over the past 3 quarters. And this right here is really interesting to me because he's basically selling his emerging market ETFs and then increasing his Alibaba position. So it looks like he's actually trying to concentrate his emerging market exposure more into Alibaba, because again, these ETFs right here are actually pretty exposed to Alibaba. So he's essentially trimming down his diversified emerging market holdings, taking that money and then concentrating it into just Alibaba, which I do think is quite interesting. And if we actually head back over to Stock Unlock here and we take a look at Alibaba and get rid of Apple and take a look at Alibaba's price to free cash flow throughout history, it's selling for a price to free cash flow right now of about 13.435. And if we take a look right here at the end of 2021, Alibaba was selling for a price to free cash flow of just 10. That is absolutely insane. I mean, if we take a look at Alibaba's average since about 2015 when it became a public company, it sold for an average price to free cash flow of 27.5. Again, it's selling for a price to free cash flow right now of 13. So, I mean, taking a look at just the price to free cash flow of Alibaba right now, it does look incredibly cheap. And actually, let's go and take a look at Alibaba's revenue growth over time. And right here, since 2015, we can see that Alibaba's revenue has grown at a compounded annual growth rate of 40.8%. That is just absolutely insane. But let's actually take a look at the free cash flow growth now in the trailing 12 months. And this actually is quite a different story. Since 2015, the free cash flow has still grown at a compounded annual growth rate of about 18.9%. But if we take a look in the trailing 12 months, it's actually only sitting at about $21.8 billion. And right here at the end of 2019, it was about $30.7 billion. So basically from 2019 to today, Alibaba's trailing 12 months free cash flow has actually declined. However, if we switch from a trailing 12 months to a yearly view, we can see that overall in 2021, Alibaba did set in a record for free cash flow at about $29.8 billion. And if we take a look at the years, they have grown their free cash flow at a compounded annual growth rate of 28%. So this honestly, in my opinion, is a pretty strong free cash flow growth rate, especially when we take a look once again at the price to free cash flow sitting at about 13. So when I'm taking a look at this just from a value perspective, it does look like Alibaba is selling for quite deep value right now. And this could be why Ray Dalio is concentrating more of his emerging market exposure into just Alibaba shares. And he's basically tripled his position in Alibaba again over the past 3 quarters. Now, the other main moves that Ray Dalio is making in his portfolio is he has increased his Procter & Gamble position by about 10.7%, and now Procter & Gamble is his second largest position in his portfolio, with an $850 million position in this one stock alone, with nearly 5% of the portfolio in just this one stock. So he seems quite bullish on Procter & Gamble. Now, if we also take a look, he increased his Pepsi position by about 13.9%, his Johnson & Johnson by 12.5%, Costco by about 7.7%, Coca-Cola by 3.8%, and then down here, McDonald's by about 15%. Now, what all of these stocks right here have in common is that these are very strong American brands. Like, basically, I mean, these are actually very strong global brands at this point. I mean, we're talking about Coca-Cola right now. And this is interesting to me because Warren Buffett has said that the best thing to own during high inflation is actually a strong brand. And Ray Dalio has again been preaching that he believes inflation is going to remain high for quite some time. So it does kind of make sense to me that he is buying these strong American brands because, again, they should do quite well during inflation and have that pricing power to continue increasing their prices with whatever inflation is doing. So basically, if Ray Dalio does think that inflation is going to be quite high for some time, then in my opinion, it does make sense that he is adding these strong American brands. However, what is interesting to me is that if we head over here to Stock Unlock and take a look at Pepsi's price to free cash flow, it's now sitting at about 32. And this is the exact same story with Apple. Pepsi's price to free cash flow has just been getting higher and higher and higher over time. And Pepsi's price to free cash flow is now actually higher than Apple's, because Apple's was about 26. And this is freaking Pepsi right now. So on a free cash flow basis, Pepsi is actually more expensive than Apple. Yeah, I just think that's kind of interesting. If we take a look at Coke, Coke has a price to free cash flow of 24 right now. And let's just add in Apple again really quickly to our freeform tool here. And we can actually see right here that when we compare Apple to Coke and Pepsi, it's pretty comparable. Like the price to free cash flows are all pretty much in line with each other. So let's add in Procter & Gamble just for fun. Procter & Gamble is selling for a price to free cash flow of about 24.7 right now. And you know what? Screw it. Let's add in Costco. And let's just zoom in a little bit. And right here, we can see that Costco's price to free cash flow is actually the highest, sitting at 40 now. So this is just really interesting to me because Ray Dalio is adding these strong American brands like Costco, Procter & Gamble, Coca-Cola, and Pepsi. But honestly, these stocks are also looking quite expensive right now, even when we compare them to tech stocks that are growing much more rapidly, like Apple. I don't know. It was just kind of interesting to me to see that, Ray is selling his SPY ETF and then basically taking that money and diversifying it over Procter & Gamble, Pepsi, Johnson & Johnson, Costco, Coca-Cola, and McDonald's. But yeah, that looks like that is what he is doing, at least in my own opinion. So basically, just to summarize everything, Ray Dalio took his S&P 500 position, trimmed it down, looks like he diversified that money into a bunch of strong American brand names, and then he also sold off a lot of his emerging market ETFs, took that money, and then concentrated it into Alibaba. In my opinion, that looks like this is what Ray Dalio is doing, and I don't know, it kind of makes sense when I take a look at it. Now also, really quickly, this platform right here that I am using to compare all of these stocks is Stock Unlock. And this is a platform that I am personally involved with building out, and we have a bunch of different features. And we're building this platform consistently. And you know what? If you guys are interested in this and you want to check it out, you can get a 7-day free trial by clicking the link at the top of my description. All you got to do is enter in your email. It's totally free. You don't have to put in your credit card or anything. And you guys can go and play around with Stock Unlock. Again, we're just adding a ton of features. I cannot wait to continue updating you all on what we add. And yeah, it's a great platform. It's what I use now, and I would recommend you all go and check it out. But that is basically my opinion on Ray Dalio's portfolio, but let me know what you all think down in the comment section below. Do you guys think that this is what he is doing? Do you guys think that he is being smart right now? Do you guys think that he is too diversified? What do you guys think about Ray Dalio's portfolio and what he is doing with it? I would love to hear your thoughts, and yeah, let me know down in the comment section below. All right, everyone, and that is pretty much going to wrap up the video. And if you enjoyed this video or you found it helpful in some way, then please remember to leave a like on it. It really helps out my channel, and I really appreciate it. And by chance, if you're new here and you're not already subscribed to the channel, and you want to stick around and see more stock market related content like this, then please consider subscribing to the channel because that would also be pretty awesome. But with that being said, that is going to wrap up the video, everyone. So thank you all again so much for watching. And if you haven't checked out Stock Unlock and you want to go and check it out, then again, there will be a free 7-day trial in the description if you guys want to go and check it out. It's an awesome platform. It's getting better literally every single day. I'm personally involved with building it out, and yeah, just go get your 7-day free trial and let me know what you think about the platform. Again, it's awesome. But that's going to wrap up the video, everyone. So thank you all again so much for watching. I truly do appreciate it, and I really hope to see you all again in my next one.